Welcome to the Deep Dive, where we unpack complex information and extract those golden nuggets of insight just for you. Today, we're pulling back the curtain on the 2024 annual report from a true tech titan, IBM.
That's right. It's easy to get lost in the sheer volume of an annual report, all the numbers, the jargon.
Totally.
But our mission today is, well, to cut through the corporate speak. We want to understand the strategic shifts, the big technological bets a company like IBM is making.
And what it really means for them.
Exactly. What it means for their future and, the broader tech landscape, too.
Absolutely. Think of it as finding the strategic blueprint kind of buried within all those financial figures. IBM has been an undeniable force in tech for decades, obviously.
Objective.
But their 2024 report, this one under Chairman, President, and CEO Arvind Krishna, it really showcases some fascinating reinventions. We're going to explore how those bold moves in the most transformative areas of tech are, well, starting to pay off.
Let's dive in.
So let's start right at the core of IBM's strategy. The report clearly anchors it on two fundamental pillars, AI and hybrid cloud. Why these two specifically? What's IBM's angle here?
Well, what's truly fascinating is how IBM doesn't just see these as, buzzwords.
Right.
They view AI and hybrid cloud as absolutely essential for clients to unlock the full, often hidden value sitting in their massive amounts of data. Companies today are grappling with data spread across all sorts of diverse environments, on-premise, multiple clouds. It's everywhere.
It's complex.
Super complex.
Yeah.
And AI offers this incredible opportunity to realize value that was previously just, unrealized. Despite the common challenges like cost, complexity, and honestly, a glaring lack of in-house expertise sometimes,
Okay.
IBM's strategy directly addresses those specific pain points.
That's a critical distinction then. So it's not just about selling the tech itself, it's about solving that fundamental business problem around data access and value. And the report talks quite a bit about IBM becoming a higher growth, higher margin business. How does this two-pronged focus on AI and hybrid cloud actually translate into that financial goal?
Well, it's essentially a complete reorientation of their portfolio. They're aggressively moving towards these powerful AI-based solutions.
Okay.
If you look at their business mix now, roughly 75% is in software and consulting.
75%.
Wow. Yeah, it reflects a deliberate pivot to areas that inherently offer higher growth potential and, crucially, better margins, leveraging those deep enterprise client relationships they've built over decades.
Okay, let's dig into the big picture financial numbers from 2024 then. IBM reported $62.8 billion in revenue. That's up 1.4% year over year. Seems steady.
It is steady. That's a good starting point, yeah.
Okay.
But here's where it gets really interesting if you want to understand their true financial health.
Big one.
While their reported net income from continuing operations was $6.0 billion, which, at first glance is actually a decrease from 2023.
Right, I saw that.
Their operating earnings, which is a non-GAAP measure they emphasize, actually saw a pretty healthy 9.2% increase to $9.7 billion.
Okay, so that immediately raises the question, why? The big difference. $6 billion reported, $9.7 billion operating.
Exactly. And the report is actually quite clear on this. It mentions a substantial impact from something called pension settlement charges.
Ah, yes, that was a big number.
A huge number. $3.1 billion pre-tax, or $2.4 billion after tax.
So what exactly are these, and why are they so important for understanding the real performance?
They're absolutely key. Essentially, think of them as one-time, non-operating, and importantly, non-cash charges.
Non-cash, okay.
IBM basically transferred some of their defined benefit pension obligations to insurers. It's like tidying up a very large, very long-term financial obligation off their books.
Right, de-risking the balance sheet.
Precisely. And crucially, these charges did not impact IBM's operating earnings or, maybe even more importantly for investors, their cash flow.
Okay, that's the critical part.
Yes. Management uses these operating earnings figures because they believe it offers a much clearer, more transparent view into the actual day-to-day operational results of the business, stripping out that one-off event.
So once you adjust for that, the underlying operational performance looks quite robust then. Diluted operating earnings per share, that was up 7.4% to $10.33.
Correct.
And their cash generation sounds impressive too. $13.4 billion in cash from operations, $12.7 billion in free cash flow. That free cash flow figure, that's up $1.5 billion from the previous year. That's a strong indicator, isn't it?
It truly is. Strong free cash flow is really the fuel for everything else, for investment, for acquisitions, for shareholder returns.
Right.
And speaking of returns, they sent back a substantial $6.1 billion to shareholders in dividends. They even increased their quarterly common stock dividend to $1.67 per share in the second quarter of 2024.
Okay.
So this consistent commitment to returning value, combined with those significant strategic investments we'll talk about, it paints a picture of confidence, I think.
And yeah, speaking of investments, they were clearly busy on the acquisition front. 11 completions in 2024. Things like the software AG assets, Neural Magic.
All aimed at bolstering hybrid cloud and AI.
Right. Plus, they announced their intention to acquire HashiCorp, which is a big name in the cloud infrastructure space.
It's a very big name.
So this isn't just passive growth, it's active portfolio shaping. They're buying the pieces they need.
Exactly. It shows they're not just waiting for organic growth to happen. They're actively buying strategic capabilities that fit directly into that core AI and hybrid cloud vision. It's quite deliberate.
Okay, so with these ambitious strategic bets now in play, where are we actually seeing the real impact on the ground? Let's peel back the layers a bit on how these shifts are playing out across IBM's core business segments.
Sure. Let's start with software. That segment saw impressive growth, up 9% at constant currency.
9% is strong for a segment that size.
It really is. And this performance was driven by strong demand pretty much across the board. Hybrid cloud, data and AI, automation, transaction processing, security, you name it.
And Red Hat. That acquisition continues to be key.
Absolutely a powerhouse.
Yeah.
Key products like OpenShift, their big container orchestration platform, and Ansible for IT automation, both showed double-digit growth in 2023.
Wow.
And this segment really highlights their high-margin focus. It boasts an impressive 83.7% gross profit margin.
83.7, okay. That's software. What about consulting? We saw a 1% increase in revenue there at constant currency. In a, pretty dynamic market, what does that tell us?
Well, it speaks volumes, actually, about the enduring need for specialized expertise. Even with, let's say, economic headwinds swirling around. Clients are still heavily investing in AI deployment, digital transformation, cloud modernization. IBM Consulting is right there in the middle of it.
And partnerships play a role.
A huge role. Their strategic partnerships with the big cloud providers like AWS, Microsoft, also Oracle, SAP, they're a massive factor.
Yeah.
Accounted for about 40% of consulting revenue.
40%.
Yeah, and delivered double-digit growth themselves in 2023. And it's interesting, they're also using AI internally with their own IBM Consulting Advantage platform. So they're kind of, walking the talk.
Eating their own dog food, as they say. Okay. Then there's infrastructure. Revenue there decreased by 3.9%. Why the decline in what's historically been such a foundational area for IBM, the mainframes, the servers?
Yeah, this reflects what they call product cycle dynamics.
Ah, the cycles.
Exactly. It's essentially the natural ebb and flow between major hardware refresh cycles. You launch a new Z system, revenue spikes, then it tails off until the next one.
Okay.
But importantly, it's not a sign of retreat. IBM is still making significant strategic investments in innovation across their IBM Z, their power systems, their storage systems.
Because they're still needed.
Absolutely. They're focused on meeting client demand for critical capacity, reliability, security, especially as enterprise-wide generative AI adoption really starts gathering pace. Those systems are foundational for handling those massive AI workloads. You need the horsepower.
Makes sense. And finally, the financing segment. Often flies under the radar, but it provides crucial support, right?
Precisely. It's the grease in the wheels sometimes. This segment provides vital financing solutions for clients acquiring IBM hardware, software services, also working capital for their business partners.
And the health of that portfolio.
Looks pretty solid. Maintains a healthy debt-to-equity ratio, 9.0 to 1, and 74% of its external portfolio is with investment-grade clients. That's actually up 2 points from the prior year.
That's good.
Yeah, and the allowance for credit losses coverage also improved slightly to 1.1%,
Right.
which reflects, positive economic indicators. It's really the engine that helps fuel the sales of their other segments.
Okay, that gives us a good view across the segments. Now, let's pivot to what feels like the bleeding edge of innovation. IBM claims an early leadership position in enterprise AI. What does that actually look like in practice? How are they delivering ROI for clients?
Yeah, they're laser-focused on tangibly generating ROI. It's not just research projects. It's about productivity improvements, automation,
Oh.
Well, through things like their watsonx platform. That's their comprehensive suite for developing AI apps, managing the data underneath, and governing the AI models, which is becoming increasingly important.
Right, the governance piece.
Huge. They're building AI assistants for practical tasks, think customer service bots, or tools to help developers write code faster. And crucially, they're developing pre-built AI agents tailored for specific business domains. Meaning clients don't have to start from scratch. They can take an agent designed for, say, HR or supply chain and adapt it much faster.
Got it. And I saw something intriguing called granite models mentioned quite a bit. What makes those so noteworthy?
The Granite family of models. These are really interesting. They're designed to be fit-for-purpose AI models, specifically for enterprise needs, not necessarily the gigantic do-everything models.
Of our focus.
Exactly. And when they're tuned with the company's own proprietary data, IBM claims they can deliver enterprise-grade generative AI with up to 90% improved cost efficiency.
90%, that's a big claim.
It is. And what's particularly noteworthy, and frankly a bold move, is that they've open-sourced these under the permissive Apache 2.0 license.
Open source. Why?
Well, they're essentially drawing a parallel to how Linux took over the enterprise server space, aiming for widespread adoption, community-driven improvement. It could be a very smart play. And importantly, they say these can be trained on client data in weeks, not months, which for businesses is a huge speed advantage.
Weeks, not months.
Oh.
Okay. Now, the report really stresses that hybrid cloud is an essential ingredient for maximizing these AI investments. How do these two big areas, AI and hybrid cloud, truly connect to create that flywheel of growth they keep talking about?
It really comes down to the data. Seamless access to data, wherever it happens to live, is absolutely vital for effective AI. You can't train models well without good data access.
Makes sense.
And we're seeing this clear trend. By 2027, analysts expect 75% of AI deployments will use containers. You know, those standardized self-contained software packages.
Right, for portability.
Exactly. Makes applications highly portable across different clouds, on-prem, wherever. And get this, over 90% of Fortune 500 companies already use IBM's hybrid cloud products, largely thanks to Red Hat.
So the foundation is there.
The foundation is definitely there. They've launched Red Hat Enterprise Linux AI and OpenShift AI specifically to provide that open source foundation for AI, making sure these offerings drive demand for each other. You use OpenShift, maybe you need watsonx, and so on.
The flywheel.
The flywheel.
Yeah.
And they've also launched something called InstructLab with Red Hat to collaboratively improve AI models with the open source community. It's a really integrated ecosystem play.
Very interesting. Okay, beyond AI, which gets a lot of headlines, they're also making pretty big waves in quantum computing. Still feels a bit like science fiction to many people, though.
It does, but IBM research is pushing the boundaries incredibly fast in this field. They've already deployed over 70 quantum systems.
70?
Yeah. And they have more than 250 organizations participating in their IBM Quantum Network. In 2024, they unveiled the IBM Quantum Heron processor.
Heron. Okay, what's special about it?
Big improvements. Significantly reduced error rates, which is the holy grail in quantum right now. 16 times better performance, they claim, and a 25-fold increase in speed over their previous systems.
Those are big leaps.
Huge leaps. They're also building a national quantum algorithm center in Chicago and deploying a next-generation IBM Quantum System 2. This is designed to support what they're calling quantum-centric supercomputing.
Quantum-centric supercomputing. What's the vision there?
The ultimate goal is incredibly ambitious. They want to build computing architectures where data can move seamlessly between GPUs, CPUs, and QPUs, quantum processing units. The idea is to tackle problems that are currently considered, well, unsolvable by classical computers alone. Think material science, drug discovery, massive, complex simulations.
Truly transformative potential, then.
If they can pull it off, yes.
And none of this, the AI, the quantum, the hybrid cloud, it doesn't happen in a vacuum, does it? The report heavily emphasizes their thriving partner ecosystem. How crucial is that piece for IBM's overall strategy?
Oh, it's absolutely critical. They're very open about it. They acknowledge that no single company, not even IBM with all its history and breadth, can provide all the necessary technology and skills for the kind of sweeping digital transformations clients need today.
It's too complex.
Way too complex. So they've strategically strengthened partnerships with other industry leaders. We mentioned AWS, Microsoft, Salesforce, SAP. Also security players like Palo Alto Networks, database giants like Oracle.
So it creates a bigger whole.
Exactly. It creates this powerful multiplier effect for IBM. It significantly extends their reach, their capabilities, and ultimately lets them serve clients better by bringing the best solutions together.
Any recent examples?
Yeah, the recent sale of their Corridor sauce assets, the security product line, to Palo Alto Networks is a perfect example. They're not just selling it off, they're collaborating with Palo Alto on new AI-powered security solutions. It's smart business, really, playing to strengths.
Okay. As we start to wrap up this deep dive, it's probably worth circling back just briefly to their financial reporting itself. We spent some time earlier discussing the difference between reported net income and operating earnings. What does the report's overall approach to financial transparency tell us?
Well, I think this report actually excels in its transparency, which is obviously vital for any company operating at this scale, especially one undergoing transformation.
How so?
They provide really extensive details, not just the top-line numbers, but everything from their overarching accounting policies down to very granular critical accounting estimates.
Like what?
Well, areas that require significant judgment. Things like how they recognize revenue, how they account for income taxes, how they value goodwill from acquisitions. These are complex areas.
And they disclose details.
They do. For instance, they disclosed having $8.9 billion in unrecognized tax benefits as of the end of 2024, with potential future reductions. That kind of disclosure offers a rare and pretty candid glimpse into potential future financial shifts. It shows a commitment, I think, to providing a truly comprehensive view of their financial position, warts and all.
And just for the record, for those who like to know the watchdogs, PricewaterhouseCoopers LLP, or PwC, has been their auditor since, what, 1923?
Since 1923, yeah. A very long relationship. And PwC confirmed the company's internal control over financial reporting was effective as of December 31st, 2024.
So that long-standing relationship and that clean bill of health, it certainly speaks to their commitment to robust financial practices.
It adds a layer of credibility for sure.
Okay, wow. What a deep dive into IBM's 2024 annual report. It really does paint a picture of a company that's strategically refocusing, maybe even reinventing itself in some ways, and executing on its core strength.
Yeah, it's a fascinating blend, isn't it? Cutting-edge innovation on one hand, but also very disciplined financial management on the other, especially when you look beyond those initial reported numbers to the underlying operational performance.
Absolutely. I think the key takeaway for you, our listener, is that IBM is far from being just a static legacy company coasting on past glories.
Not at all. They are actively and quite strategically shaping their future around enterprise AI, hybrid cloud, and even quantum computing. It really demonstrates how even the most established giants are embracing deep, fundamental transformation to stay relevant.
And understanding those nuances in financial reporting, like we discussed with the pension charges versus the ongoing operating performance, it really gives you a much richer, much more accurate picture of a company's actual health and its trajectory. Plus, that emphasis on strategic partnerships really stands out. It shows that collaboration, even for industry leaders like IBM, is absolutely key to success in today's incredibly complex tech landscape. No one goes it alone anymore.
That's right. And you know, as IBM continues this journey, really aiming high, talking about solving previously unsolvable problems with things like quantum-centric supercomputing and integrating AI into seemingly every facet of business, it leaves us with a pretty provocative thought, doesn't it?
What's that?
Well, what new ethical, societal, or maybe even philosophical challenges might emerge as these exponentially powerful technologies, AI, quantum, become more pervasive? And how will companies like IBM, and frankly, how will all of us, need to adapt to this rapidly arriving new era of innovation?
That is a big question, something for us all to think about.
It's a conversation that's really only just beginning.